Good afternoon, everybody. Thank you for joining us here today. We have an update from Ionic Rare Earths, which will be delivered from the Managing Director, Tim Harrison, who has had a busy time over past months. And I'm sure you, like me, are looking forward to an update and progress on this company. I'm going to hand it over to Tim, and there'll be time for questions at the end. Thanks, Tim.
Thanks, Peter. Good opportunity given recent sort of activity with the company, and also the rights issue that we have open at the moment to provide a bit of a rundown on recent developments and activities with shareholders, and also step through some of the recent activities, but things that are coming up. So just moving ahead. Just our cautionary statements. So just recapping on the vision of the business, and it's really around sort of being a key enabler in creating resilient, fully integrated Western rare earth supply chains. Part of that is accelerating and developing the recycling, magnet recycling angle. And so we, through our 100% owned UK subsidiary, Ionic Technologies, we're now producing separated magnet rare earth oxides. So in addition to NdPr, which I think a lot of investors in the rare earth space will be conscious of, we are also producing high purity separated dysprosium and terbium oxide, and selling that material right now into supply chain customers, partners who need that material. And up until April of this year, was able to source some of that material from Asia, from China. However, post the export restrictions that were implemented on the 4th of April, we've seen a huge increase in demand for the separated oxides we produce, but specifically those two heavy rare earth elements, dysprosium and terbium. Recently selling some of our excess dysprosium for around sort of $900 a kilo. So about fourfold on what dysprosium is going for presently in China. So there has been, significant appetite for our heavy rare earths, in addition to sending samples off not only to partners in the UK and Europe, but also into the US, where we are very keen on prioritising, expansion of our footprint, and the relationships that we're building in that market. Also, just want to point out that the base technology on rare earth separation is also, what we intend to use for our downstream refining efforts, specifically around the joint venture that we've established with VMM, which is Viridian, looking at refining in Brazil. Why we like recycling is that it's low capital, it's modular, and we can develop it in the backyard of Western governments. And so it provides a substantially lower risk threshold for our supply chain partners looking at bringing capacity to those Western markets. The technology, as we mentioned, it's modular, it's small, and that enables us to look at how we think about hyperscaling. So that is the rapid deployment of the technology beyond what we're doing right now in the UK. Obviously we've talked about our ambitions in the US. In addition to that, we're evaluating opportunities in Brazil with our Viridian joint venture, but Europe, Asia, the Middle East. And so we have a number of discussions underway at the moment. And beyond that, leveraging that technology with the Viridian joint venture, we also have the Makuutu Heavy Rare Earth Project, which is a large ionic adsorption clay deposit in Uganda. It is a development-ready asset, and so we are in discussions with a number of groups looking at how that asset and the heavy rare earth rich basket flows into an alternative supply chain. And so recapping on that, we do, and reiterating, recycling is the fastest path to supply chain independence away from China, and provides us with a product that's, very sustainable, providing that fully circular, green, supply chain, low risk, low capital, and the ability to integrate in new capacities across metals, alloys, and magnets, which is being developed now. If we talk about now ionic technologies, and we use the term there upcycling, and the differentiation here on our technology is that we're taking end of life materials and a range of different materials, whether they're spent magnets, they're pre-consumer waste, or they're swap from the production of magnets. And we're able to unlock the rare earth content, the individual rare earth elements within, which enables us to then redeploy those individual rare earth elements into higher specification, higher class of magnets. And really focusing on the differentiation here is our ability to provide that high purity dysprosium and terbium for Western supply chain partners. We've worked through the de-risking of the technology. We've demonstrated the technology at commercial scale. And now we're working through the financing for a commercial plant in Belfast. Talking about the ramp up and the de-risking of the technology, obviously when we acquired the technology back in 2022, it was at lab scale. Over the course of the last 3+ years, we've invested in de-risking, demonstrating the technology and providing material for our supply chain partners to validate. We've demonstrated through our demonstration plant the capacity to make and repeatedly make high purity separated oxides. And that material now is being leveraged into supply chain partnerships. We've got public collaborations there with other industry participants and supply chain partners across metals, alloys, and magnets, and the OEMs, the ultimate customers that are very shortly going to have our recycled rare earths in magnets used in electric motors that they're looking at commercializing specifically in the UK and Europe as a first pass. And then beyond that, the commercialization of the technology, the feasibility study that we completed last year, and looking at having that in production, producing separated oxides in late 2027. Commercially, and looking at the financial metrics of that feasibility study, looking at producing 400 tonnes per annum of separated rare earth oxides, we had a capital estimate in Belfast of £85 million. About 10 million of that was location specific. And so we're working through the financing and pulling together the capital stack for that development in the UK with great support from the UK government. I suppose what I'd like to sort of point to the upside here is that, when we look at a resource or a reserve in the mining industry, typically we'll see something that diminishes over time. It depletes. The inverse is the case for recycling. What we actually see is that the resource and reserves of material for recycling increasing year on year. And so whilst we have a 20-year life of operation, the reality is that these are recycling facilities that will continue to recycle and separate and recover those rare earth elements for many, many years to come. And so it provides a robust de-risk mechanism for customers to be able to secure the materials they need in order to make the magnets, the specification of magnets for their products. And those products will continue to evolve and iterate and improve. And as such, the ability to separate our rare earths and then be able to deploy those rare earths on that next generation of magnets becomes increasingly important. We've completed the life cycle analysis, which we released to the market earlier this year, showing approximately a 60% reduction in CO2 footprint for both neodymium oxide and dysprosium oxide, and comparing that against the primary supply chain. So it does provide a significant advantage to the customers that we're working closely with now. And it is an accretive opportunity for us and the way in which we think about commercializing the tech with the partners that have shown interest in adopting our technology and materials in their supply chain. With regards to the capital and securing the overall capital component to develop that first plant in Belfast, or potentially the first plant in Belfast, we mentioned before the £85 million capital estimate for Belfast. We're in discussions and finalising those discussions with the Advanced Propulsion Centre, which is administering a large fund for the Automotive Transformation Fund, the Department of Business and Trade in the UK. And between that capital grant and also working closely with the National Wealth Fund, we see collectively the UK being in for and being supportive for around 50% of the overall capital requirement for the Belfast recycling facility. And so as we finalise the grant process and all of the additional information that's been requested to satisfy both the UK government requirements and also the EU requirements, given we're located in Northern Ireland, we're working closely now with the Grant Delivery Directorate within the APC and Department of Business and Trade to get this squared away so that we can finalise that capital, the initial capital, which enables us to then move forward with the strategic partnering for the overall commercial development in Belfast. Back in July this year, we announced the next iteration of our supply chain build out in the UK. And so the Circular Economy Initiative, which has received approximately £11 million of grant funding from the UK government. And that's working across the full life cycle and the supply chain for rare earth magnets from the aggregation and end of life materials through our upstream supply chain partner with European Metals Recycling, providing us with end-of-life materials that we then separate into high-purity oxides and send down to our supply chain partners there in Less Common Metals. They make the metals and alloys, delivering that material to two of our existing magnet partners, being Vacuum Smelts and both Vacuum Smelts and GKN Powder Metallurgy, both located in Germany. And then they're making magnets that'll go into a range of different applications, and working closely there publicly with Ford, Bentley, and Wrightbus. And those not familiar with Wrightbus, they make the big double-decker London buses, which are all going electric and manufactured in Northern Ireland and exported into Europe now. Very big market. And in addition to those three parties that we're working with on this supply chain initiative, we're working with some other OEMs as well. And so rounding that out with the BGS, the British Geological Survey, and the support of the Advanced Propulsion Centre, this is a 3-year initiative which also prepares us now to work towards the commercialisation of that supply chain in the UK. Belfast is a strategic location. Well, it's got fantastic infrastructure with a deep water port, and that deep water port is one of the ports, probably the prime port in the UK for both the rollout of offshore wind and the decommissioning. So working closely there with stakeholders, and given its position in Northern Ireland, I mentioned previously the Windsor framework, we are working across both the UK and European market, and that enables us to be able to extract a number of opportunities, which is pretty exciting. And so with the infrastructure there, ourselves and a number of other companies that are moving into and already in the Belfast region, Belfast is establishing itself as a long-term player in the offshore wind rollout and decommissioning process, and naturally then provides Ionic with a real advantage on a very big market. And some of the early numbers that we've seen from the BGS suggest that by 2030, 2035, the UK will be consuming around sort of 10% of global magnets across the automotive space, but also, a rapid rollout of offshore wind. And so it is a very big market. and a market that will grow and provide a steady flow and a growing flow of magnets for recycling in the future. One of the areas, we are doing some work now is around sort of, the positioning of the company against, certainly against our peers and the advantages of the technology against a number of players that are in the space. Now, we as Ionic Technologies, we operate what's called long loop recycling, which is effectively taking the end of life magnet and going all the way back to the high purity separated oxides. There are a number of other companies in this rare earth magnet recycling space that are going to various different products along that supply chain. And as such, the classification of their processes being either a medium loop, which would be going back to let's call it a mixed rare earth, or an intermediate product, and then the short loop recycling, which is effectively just going back to an alloy powder. And so there is some real differentiation on the technology, and I think with that differentiation on where that material ends up in the supply chain. And I think what we've been able to do as an organisation is demonstrate the relationships that we've been able to build with end customers that enables us to be able to then make the magnets at the specifications required to go into the EV industry, to go into offshore wind. And I think that is a differentiator and something that hopefully the market starts to appreciate over coming weeks and months. Probably also worth pointing out the disconnect, I think, on perceived valuations for certainly the recycling opportunity, and the way in which maybe Australian investors are understanding or perceiving the opportunity on recycling, as opposed to the way in which Northern Hemisphere investors are seeing that recycling opportunity. Certainly the multiples and valuations being applied in both the North American and European markets certainly would infer that there's some significant upside for Ionic Rare Earths and the commercialization of the technology moving forward. When we look at the development of the technology and what we've been able to demonstrate, and our advantage on taking the technology from demonstration now to commercialization, we have demonstrated a process that's able to produce high purity separated oxides that can take into account highly variable material and consistently produce the material at the specification required for our customers. We're looking at taking the process to a continuous process. We've demonstrated through both life cycle analysis and feasibility studies, the advantages of the technology, both from an environmental footprint and a financial metrics. And given the products that we've produced, demonstrated that they're suitable to go into the sintered NdFeB magnets to go into EVs and offshore wind. Now talking a little bit about our Viridian joint venture, which is a 50-50 partnership in Brazil between Ionic Rare Earths and Viridis Mining and Minerals, where we're looking at, obviously, in Brazil, developing magnet recycling, but also in Brazil and certainly North America, looking at developing the rare earth separation refining technology and commercializing refining in the first instance in Brazil, with then a view to bringing refining into the North American market. And so, it's a very exciting opportunity. Having just come back from a couple of weeks in Brazil, certainly a wonderful base, resource base on which to build a downstream supply chain, and a very strong appetite from the Brazilian government to not only just look at the primary assets, but they're wanting to build out the supply chain. So through recycling, we've been able to certainly develop and provide rare earth oxides to new capacity on metals, alloys, and magnets that's being developed in Brazil. And I think through Viridian, it provides certainly Ionic Rare Earths with a front row seat to what's going to happen in Brazil, and then being able to take the Colossus product and potentially mixed rare earth carbonates from other projects in Brazil to separated oxides for the build out of a much larger Brazilian rare earth supply chain. And so talking about those oxides that we delivered to the team in CIT Sinai in Belo Horizonte earlier this year, we took end-of-life magnets from Brazil, took them across to the UK, recycled them, sent them back the high-purity oxides. And that's through a broader MOU and collaboration. Will be a foundation where we now look to replicate what we're doing in the UK on recycling and build that supply chain from recycling in Brazil in the domestic capacity. So, it's a very exciting opportunity to be part of what could be a very large rare earth supply chain that has all the hallmarks of being long-term cost competitive with the Chinese existing rare earth supply chain. Through Viridian, we've also had really positive engagement with government. Back in June, we were shortlisted with a $1.4 billion fund US established by the Brazilian National Bank of Economic and Social Development, so BNDES, and a federal agency that administers studies and projects called FINEP. And so we were selected as one of a number of projects or submissions applicants to have dialogue and discussions with the government there around helping to build a supply chain. Pleasingly, we were selected in July, and I think I understand. I think we're the only rare earth company that has been selected for that fund, and we're now working with Viridis and ourselves in discussions with stakeholders at BNDES and FINEP around the total funding package. And we are very keen to now accelerate not only leveraging off the back of what's happening with Colossus, but also now engaging with investors and government stakeholders, and also some international government stakeholders about what's happening with Viridian and how quickly we can bring that to market. So, there is a lot of interest in what's happening in Brazil. It has a wonderful potential and a very supportive state government, local municipality, and federally to build a much bigger rare earth supply chain. If we talk about the support that we've had there in Poços de Caldas, I was fortunate enough to be there a couple of weeks back, where we were able to have a ceremony with the local mayor and municipality, whereby the land that had been granted to Viridian was formally handed over. And on that site, we proposed to build our refinery pilot plant, and also the magnet recycling downstream. So a very supportive community engagement. Really quite impressed with the infrastructure that's available to us, the quality of the team that we've been able to establish, and the very strong local community support for the Viridian joint venture. So I feel very bullish about the opportunity in Brazil. Finally, covering off on the Makuutu project, and probably a project of certainly a lot of significance in a Western supply chain context. It's a development-ready ionic adsorption clay project. It's got a mining license, environmental permits, and being at its advanced status, as a member of the Mineral Security Partnership, a lot of engagement with Western supply chain partners because of its, defining basket. 71% of the basket is magnet plus heavy rare earths, and if we zero in on that heavy rare earth fraction, which has become increasingly more sensitive post the 4th of April this year, 45% heavy rare earths is in itself a unique proposition to support certainly the bifurcation of supply chains and developing capability in the US. And so we continue to look and have a number of discussions with stakeholders in the US around the commercialization and development of Makuutu into a US supply chain. And then, on the back of that, we've completed the feasibility study back in 2023. Mining license has been awarded. It's a large resource that spreads approximately 30 kilometres plus. So it is bigger than the island of Manhattan, which I think is something that resonates strongly with potential US stakeholders. And for a capital development of around 150 million US, would be a pretty strategic punt and strategic asset to bring into a holistic US supply chain. And so, we continue to explore options around that. And our strategy in the US is one that sort of leverages off both recycling and the primary supply, bringing all of our assets together and being able to demonstrate a resilient upstream sourcing from both primary and secondary supply of separated magnet and heavy rare earths. And so, certainly our GEM, Brett Lynch, has been in the US for the past 2.5 weeks. They're talking about the unique offering with stakeholders in Washington, but also, a number of groups that we've been working closely with for a few years now around the holistic positioning of our assets within a much larger resilient rare earth supply chain for the US. So, it's an exciting opportunity and one that requires a lot of engagement, education, and I think as a business now getting very close on being able to take it forward. The strategic appeal really around the value for what we bring is our ability on recycling to move very quickly to satisfy requirements in the military and defence space. There's been significant investment and a lot of focus on those US supply chain partners over the last few months. Significant investment coming from the Department of War into MP Materials and a number of other things that are being worked through at the moment. And so, we do see a very strong focus now on the ability to provide high purity separated oxides beyond NdPr, a lot of focus on dysprosium and terbium now, in order to make those magnets and alloys that are required across the defence complex. So I think we're well positioned to not only be able to accelerate the recycling as an immediate stopgap or an immediate remedy for short-term squeeze on availability of this material, but longer term bring forward the Makuutu project and that heavy rare earth rich basket. Finally, just covering off on the overall corporate position, trading at about 1.5 cents at the moment, which values us at about 86 million Australian dollars. And, probably just refreshing and bring the rights issue to the attention of shareholders who, one, have maybe not yet participated or elected to participate. Probably worth pointing out that it is a rights issue, it is a renounceable rights issue, and as such, shareholders have the opportunity, if they don't want to take up their rights, to trade those rights. Trading of those rights closes tomorrow, Thursday the 2nd of October. And the intention at this stage is for the offer to close next Thursday. So just reminding shareholders that they have until 5 p.m. next Thursday, the 9th of October, in order to take up the offering under the rights offer. And that's offering approximately 1 new share for every 15 shares that shareholders possibly have. They're able to take up those shares at 1.6 cents. And then with each share, there'll be one new option. Those options will be listed with a strike price of 2.5 cents and an expiry of 30 September 2028. So the options themselves will have a value, and I think it's a pretty good opportunity for shareholders to top up before some significant catalysts emerge shortly with certainly the finalisation and award of our capital grant in the UK, but also progress on our US activities and developments that are occurring in Brazil. And so with that, Peter, pretty exciting time for the company, and happy to take some questions.
Thanks, Tim. As you said, a multitude of catalysts. There is a lot going on for a small company, and I know that you and Brett and your team wear many hats and are doing everything possible, as you've demonstrated here in the presentation, which I'm sure shareholders will be happy to have listened to today. And we do have quite a few questions. I'm going to kick off with the first one. Ionic Technologies recently hosted a visit by UK Minister Sarah Jones to the Belfast plant. How are you seeing the level of support from the UK government and Northern Ireland?
I would say we're very fortunate to have very strong support from the UK government, and I think that's been been on display for some time now. A raft of different grants that we've been recipients of by the APC, and so very strong support there from the Department of Business and Trade and the Advanced Propulsion Centre. We work very closely with the UK government on not just what we intend to do with the Belfast development, but holistically a rare earth supply chain. And so, I would say we have very strong support from the UK government. It was great to host the minister last month. Unfortunately, a cabinet reshuffle has meant that we subsequently now have a new minister, Michael Shanks. Brett and I were both fortunate enough to meet the new minister earlier this year. And I feel very confident and comfortable that we're well positioned to hopefully very shortly have some very positive public news around the award of a capital grant for a cornerstone investment on our UK Belfast facility.
Thanks, Tim. And would that lead into this question? What is the status regarding Ionic's application for funding from the UK government via the Automotive Transformation Fund?
Okay, so we've provided a lot of information to stakeholders at the APC and the Department of Business and Trade. We're working closely now with the Grant Delivery Directorate and satisfying the requirements of certainly the award of the grant under UK law, but also probably worth pointing out, and something that we're becoming, I suppose, aware of. We, being in Northern Ireland, we're also subject to some of the rules that apply with the Windsor framework. And so that means not only satisfying requirements of UK Government Subsidy Control Act, but also requirements within the EU under state aid regulations. So, this is information that we're finding out. We are a bit of a test case. We are the first company that has gone through this process underneath the Windsor framework. As you can imagine, there's not a huge amount of companies in Northern Ireland commercialising, materials or technology around strategic raw materials and critical raw materials in the UK. So we are, I suppose, a bit of a test case, and so as such, we're finding out all of the challenges along the way, but with the support of the UK government, we're addressing all of the requirements. And so hopefully we're not far away now, having, I think, satisfied all of the requests from Department of Business and Trade and APC. Hopefully, yeah, we've got that grant very, very shortly.
Thanks, Tim. I think you covered much of this question in that answer, but and you may have mentioned it through the presentation. But what's the scale of funding you're expecting from the UK government, and why do you think it's taking so long to be announced? Which I think you may have covered just there.
Yeah, look, I think so. Total capital, 85 million. I think we've got visibility that we expect across the grants and also support from UK government via potentially the National Wealth Fund. We expect probably around 50% of the overall capital, maybe a bit more, to come from the UK government. We understand there's a very strategic need for what we're doing. There's very strong support. There is a desire to make this happen. We just have to follow due process. And I can appreciate that this has been frustrating for shareholders. I can share that it's been also frustrating for us. But I think we follow due process. We have to adhere to the mechanisms and the process that government has to follow. And hopefully we're not far off. So I think we've done everything we could have done, and we continue to work very closely with our strong supporters in the UK government who want to issue this grant shortly as well.
Further to that, Tim, regarding the loan or grant, is there potential for strategic partners or commercial debt from outside that may be considered as part of a package?
Yeah, look, we've been engaging with a number of potential strategic investors, and so that's been a parallel path that we've been working through. Technical due diligence. We've had visits from groups overseas, working through the technology, not only looking at what we're doing in the UK, but with a view to the commercialisation and rapid rollout of the technology in other markets like the US. So I think to answer your question, Peter, we've got a number of groups that we're working with. However, I think for any rare earth development, what we've seen is the expectation, desire from investors is that government money probably needs to be the cornerstone first money in, and then once the government support is there is strong support to get in behind that commitment from government.
Thank you, Tim. That covers that one. We're moving on to Viridian, who recently had a groundbreaking ceremony for their planned rare earth refinery centre, which is the first in South America. How are you seeing the outlook for the joint venture and Brazil more broadly?
Yeah, look, I have to say, Peter, I had a very, very positive trip. Wearing a couple of hats, but focusing on the opportunity with Ionic Rare Earths. The Viridian joint venture, I think, gets the opportunity to benefit from a fantastic primary asset with Colossus. Wonderful stakeholder support, wonderful, whether that's at municipality, local community, state government, federal government, the indications and what I heard firsthand, what I observed would suggest that they really have a very unique opportunity. And, given the infrastructure that's available, not only to Colossus, but also to Viridian, I think it really has emboldened my view of just how material the opportunity could be with Viridian. Looking at how we can accelerate the magnet recycling opportunity, working closely and visiting with CIT Sinai in Belo Horizonte, looking at the work that they've been able to do, the facility itself, producing magnets, from next year, but then being a key enabler of that Brazilian supply chain by providing them with separated rare earth oxides. I think it really differentiates us and beyond sort of the opportunity of processing the product from Colossus, there's opportunity and interest for us to also produce and process mixed rare earth carbonate from some of the other developers in Brazil. So I think it is a real differentiator and a huge opportunity that exists in Brazil. So very, very bullish on what I saw, and very exciting for the company to think about where we could be within a very short space of time.
And following along from that, we've seen recently the US government taking strategic stakes to secure their own domestic supply of critical minerals, lithium, rare earths as well. What's the status of your US expansion, and do you see any other sort of support coming from authorities in the US?
Yeah, look, we've had some really positive engagement in the US that's really ratcheted up over the course of 2025. Brett and I were requested to head to the US in February. Then by the time we were back in April, the export restrictions and the Chinese turning the tap off was already in force. And so bit by bit, every trip back to the US has just been this escalating sort of opportunity. And it's not just about the recycling; it's the value and the opportunity of Makuutu, I think, that's resonating with stakeholders in the US, and we're working on a number of things there. I think what we're seeing is US government ready to deploy, and I mentioned before, and I think anybody in the rare earth space is acutely aware of the impact that the Department of War's investment in MP Materials had a couple of months back. It really flicked the switch, and we've seen a dramatic increase in certainly the valuation of companies that have got any exposure to the US supply chain. And I think what that bodes pretty well for is for Ionic and the expansion of our technology into the US market. A very exciting phase, hopefully is just at the doorstep.
Tim, Ionic has stated previously that there is potential for multiple magnet recycling plants in the US and other markets. Can you add a little bit of colour to that statement and update us on where you think that plan is headed?
Yeah, so going on from sort of the activity in the US, back in April, we made a couple of key appointments to certainly build out the executive capability in the business. We appointed Claire Blanchard to be a commercial director, helping us with our upstream and downstream sourcing and offtake agreements, but also a lot of that supply chain engagement. And we appointed Patrick Brindle as effectively our operations lead for the US. And look, Patrick is now working through a number of those opportunities, working with different state regulators and state development agencies around those. We've got a number of discussions happening with various groups, some more advanced than others. Hopefully, we're in a position where we can talk about those publicly very shortly. Looking at sites now for the rollout of the technology. We're about to kick off our front-end engineering design for the recycling technology, and thinking about how we develop this design so that it can be rapidly deployed across our target markets. Potentially opens up our ability to develop, based upon existing infrastructure, existing facilities. Simply bring skid-mounted capability that can be rapidly deployed, meaning that we can very quickly roll out the technology and work with our supply chain partners, not only the end-of-life applications, but also working closely with new metal alloy magnet capacity being established in the US. We've been and sent materials off to the US to work with some of the groups that we're working on now about qualifying materials, making metals, alloys, magnets for some of their customers, demonstrating our materials in their supply chain. It's a pretty exciting phase. Certainly, what's happened and what's happening over 2025 in the US market and the opportunity for rare earths is incredibly exciting for the business.
Tim, some questions regarding less common metals and the recent takeover activity that's occurred there. Do you see that relationship changing, more beneficial or otherwise?
Yeah, look, I don't see the relationship changing. I think we've got a very good relationship, and subsequent to that transaction, we've had dialogue with LCM. I think it's business as usual. We're working collectively on the UK supply chain. We will work collectively on the US supply chain. I think we have technology and a business offering that's complementary. Beyond those two markets, we are looking at working and providing materials to customers across Asia as well. So I think we're in a pretty unique position. We've got a very strong relationship. It's a great deal for LCM. Certainly values LCM, at an appreciable amount. I think it's a great deal for LCM, and I think USA Rare Earths can see the value in that business and that technology. And I think US investors, certainly based upon what we're seeing as market capitalizations and the way in which they're valuing companies in the rare earth space, I think it probably turns out to be a very cheap acquisition in the long run.
Thanks, Tim. And this question, it's always hard to talk about your own share price and the market's perspective on your valuation. But recently, after the MP Materials deal and China export controls, a number of rare earth companies have seen re-rating. The latest investor research from MST Access values Ionic at about 11 cents a share, which is a bit different to what we're seeing here in the market today. I know you're happy to address this. It's a good opportunity. What steps do you think are necessary to close that gap?
Yeah, look, I think there's a number of things. I think shareholders are, waiting patiently for the validation that comes from the supply chain, that comes from government, and we are aware of the impact of the grant and the validation and the cornerstone commitment from the UK government. So I think that's potentially a big step towards a re-rate. I think what we have seen is any company that's got an association with the US supply chain in the rare earth space has really seen their share price, rocket. And I think, we've been working behind the scenes to position the company, and hopefully we're in a position to benefit from those same, I suppose, re-rating events on the back of what potentially comes shortly with our US supply chain and US footprint. So it's great for those companies, and hopefully for Ionic, we're next.
It's just a matter of some of these catalysts being achieved, Tim, and I'm sure market perception will change very quickly given the fundamentals that you've put in place. We're going to finish up here just with a bit of a comment from you to shareholders on why they should be confident in the future and what you want them to look forward to for this company, Ionic Rare Earths.
Okay, thanks, Peter. Look, I suppose offering this deal to shareholders via the renounceable rights issue, it is an attractive deal. We've priced options or priced the new shares with the listed option. The listed option itself will have a value, and I think if we look at the pricing of the options, the company has been trading within that price range within the last 3 months. So I think there is inherent value in the rights issue at 1.6 cents, and I think near-term upside for not only the return on the subscription with the rights, but also the options. So I think it presents a wonderful opportunity for shareholders. Shareholders get the first right to take up the offer. I'm confident that if there is shortfall, that there's certainly strong demand to pick that up. However, we did want to make sure that the shareholders got the best deal, and I think that that's what we've been able to do here.
Very well, Tim. I think you've pretty comprehensively outlined the plan here, the strategy, the mechanics which are going on behind the scenes. And I know that you and Brett have traversed the globe and left no stone unturned to progress the great technology that you've developed and the company that you've put together. So I would thank you today for your presentation, Tim. I would thank everybody here who's joined us. And if there were further questions that we'd like Tim to answer, please email them through to me at peter@nwrcommunications.com.au. I see that Tim gets them. And Tim, I guess you've got a bit more work to do.
Always, Peter. There's always stuff happening. And so, you know, we look forward to the support of shareholders with this rights issue and then some near-term catalysts and a strong re-rate.
Thanks very much, Tim. Thanks everybody for joining us.